Stephanie Link of Hightower Advisors. Steph, what's your take on what's happening in the market today? You know, we haven't talked about small caps, nearly enough, probably relative to other areas of the market. But that seems to be the most acute point of pain, certainly over the last couple of days.
Well, it's also been an outperformer up until the last couple of days, right? And it trades along with value. It trades along with cyclicals. And those sectors have actually done pretty well this year and actually all of last year, right? So this is a give back, Scott, because there's a lot of nervousness for sure, right? Powell, the comments this week, very hawkish, data dependent, but maybe less willing to wait and see. Right? In terms of we're going to go and we got to go more. And I don't know if it's 50 next time or 25, but it probably is 75 more basis points of tightening. And the market's nervous about that because we don't know what the outcome is going to be. And they're focused on, as Richard Fisher just said, they're focused on inflation. And inflation is still stubbornly high, but it is coming down from the peak. So we have to watch that. But the Fed can go this aggressively because the job market is so healthy. Now, I will say tomorrow, yes, is important. But it's one number, Scott. I'm keeping an eye on initial claims, which are starting to inch higher. I did not like that Challenger Gray number, which if you add off the layoffs from January and February, it's the worst number since 2009. So, you're starting to see a little bit of cracks. And then, of course, the Silicon Valley Bank, this is absolutely a catalyst to have the market sell off. The fact that the company backed half of the U.S. venture capital in technology and life sciences, that is so incredibly speculative. And the fact that the company is just now figuring out higher rates are going to hurt their business, this stock deserves to be down even more, in my opinion. And I do not think the large six banks are in anywhere near this kind of shape. They're very, very much diversified into wealth management, asset management, capital markets, trading. Yes, we know net interest income is a big part of their books. However, numbers are coming down for net II after the last quarter. Everybody lowered their NII numbers for the entire year because we saw what was happening. Deposit betas are going higher, and that's actually a pressure point.
I understand. But why are we fixated on the large banks when it's the smaller ones where, maybe some of the more important issues lie? You just said, and this goes to the heart of our conversation, the Fed can continue to go because the job market is so strong. Well, as I asked at the outset, maybe we're looking in the wrong place. And that's not the decider of whether the Fed is breaking anything. It's what we're talking about today. It's below the surface where the cracks start.
Right. Okay, well, the cracks can start at some of these speculative banks that are involved in crypto. That should be no surprise. Silicon Valley Bank, even though this is very disappointing and it's kind of like where is management and what are they even thinking kind of a thing, they do have a PE backer, right? They are raising capital. They are reorganizing
but look at these losses,
their structure.
Though. Right? I'm sorry to interrupt you, Steph, but look at the losses in the other parts of the regional bank complex. 4, 5, 6, 7% declines. Surely Silicon Valley Bank isn't the only one sitting on unrealized losses that may be at some point forced to take those losses, if not raise capital. And isn't that a concerning point to you?
Well, of course, this whole thing is a concerning point to me, for sure. But my whole point is the big six banks are the biggest ones, right? And they actually are overcapitalized right now. They have had years and years and years of regulators on top of them making sure that they raise enough capital. And by the way, the 22 other banks, largest banks in the country, had to do the same thing. So the capital levels are better. And I do think that Silicon Valley was one of the most risky. I don't want to even talk about the crypto-exposed banks. I just don't, because they don't even mean anything. They're so small. But I think that Silicon Valley Bank was of the bigger names, of the bigger companies. They were the one that really were much more exposed. It's not that I'm not troubled by it. I just don't think it's a contagion at this point in time because, again, you have these other banks, the biggest banks in the world that are so overcapitalized. I don't think this is a great financial crisis kind of a situation. I want to say this is a one or two off kind of thing. Does that mean the banks are going to be good investments for the near term? Probably not, because everyone is going to be nervous. But I'll bet you anything, when the companies report earnings, people will feel better about the underlying situation. By the way, the big six, they have very little mortgage exposure, too. That's also something that they have changed over the last many, many years.